Man, somebody is blowing up my phone. It says I'm connected. Here we go. All right, there's the bell. Get zoomed in on the 5-second chart. Go down to 1 minute. Bam. See if we can get loose of this range and approach that upper liquidity zone. If you remember last week, this zone here was actually red. It was a critical support zone before. Now it's our resistance zone, so I'll just leave it gray. And we can see over here on the SPX, since we had that gap up, we're right at about a 50% retracement on top of that bar. All right. All right, starting to turn red over here on SPX, but we got a double bottom on a 5-second possible. And Tesla is just running for the hills. Yeah, so much for that double bottom unless it pulls here. Nope. Breakover. Heading for probably about 397.80 if that breaks. It's so quiet in here. How is everybody this morning? Sweet. Welcome home. Not bad. Going to all the different equine shows and stuff. Wow. Been busy. We pulled back to 397.95 for a moment, but then we popped off of this. What are we looking at? That would be, if I can get it to draw fast enough, a megaphone in the wrong spot. I'm going to let this work out a little bit more though, because that's a 5-second chart. But since it's a megaphone, throw it all down. Okay. I'm a bit scratchy this morning, so I apologize if I'm hacking in your ear. That's kind of weird. We've got, oh, that's right. It was a gap opening. My bad. I keep forgetting that there's no pre-market data from SPX. It's just open. Couple dojis on top. Man, I'm just all kinds of scratchy this morning. Yeah, we got a little bit of rain. It was really foggy this morning before it rained. I'll just keep chugging a little bit of Gatorade. All right, Tesla's climbing, man. That was a pretty easy target. Let's see here. Delete some of this old dope here. See, we're right at a pivot on Tesla. That's why we're holding up here for a minute. All right, we went right to that 398.58. I had this from Friday. This was on the 5-second chart. Love how those old numbers, even though they're odd, they pop right in as a resistance point. Usually SPY tends to trade in like whole quarters and 50-cent pieces and dollars sometimes. But you'll get these on the shorter time frames, you'll find just some odd numbers that seem to stand out to you. Extend this. I wonder if we start getting compression here. That was kind of a very sudden sell-off there. Makes me wonder. Pardon me. Dang. I was trying to pull up FRC, not Ford. There we go. Yeah, a bunch of people went chasing that this morning. No bueno. That thing got down to like 11 something last week, didn't it? Yeah, 1174. Oddly enough, that's an old trend line from way back here on the low. Came to that accumulation point. Look at that. Perfect to the target. If it's going to bounce at all, it'll bounce here. If not, that thing can fade all day. As Tesla just kind of grinds on. Bam, finally broke that pivot. Cool. See, this is likely to complete the move down here to about 397.50. There's a support level established here, but it's very temporary. There it goes. Pardon me. I should be laying down. So I'm going to see if I can get some options positions for long-term. Kind of setting up some swing trades, but I'm a little iffy. I think I want to wait till about the end of this week or maybe Thursday, just because I've seen something that's kind of sticking out to me as far as this market condition is at a time where it can go either way. And I was talking about it a little earlier with the SPX and stuff, with that descending megaphone. Pardon. Good morning. If we reject there and head on down, we've got support zones here on SPY at like 372, probably 352, somewhere in that neighborhood. Comparatively on SPX, we throw up that 2-hour chart. We got that descending megaphone. Well, if we reject here, we'll likely come down and play with these two regression lines, even though we've already made, 1, 2, 3, 4, this would be 5 on angular resistance. So if it can't get to that 40-60 target and break it, this can break down and be bearish long term. So short term, we maybe have, possibly a week or so of bullishness to get to that 40-60 if it remains bullish for now. But we've got a lot of headwinds in the market space, so kind of comparatively, we're at a tipping point. Oh, in the pre-market, which bank was going to buy them? First Republic. They're being bought by who though? Ah, okay. It's a Silicon Valley Bank. I thought they were being bought by okay. Oh, $2 billion discount. All right. Oh, 20 billion even. Yeah. Well, we'll write him a check. Yeah. Nice. Yeah, it's kind of, I mean, you get this kind of instability in the banking system and it shakes up the whole market, but all in all, the market's going to keep doing what the market does. So that's why I'm kind of looking at SPX going, I'm going to make this pivot red, bright red, because this is going to be a tipping point just outside the megaphone. But we know that when this pattern fails to reverse and go for a 50% retracement, it'll do it right in line with the previous peak. So like if you have this guy right here, that's your critical pivot, 40-20. So if we can't break that and we get rejected here, we're definitely in bad shape, because it'll come down and test this for support, probably around 39.70 to 39.75. And then if it resumes a bearish trend, it'll come back into this pattern. This is the fifth impulse on angular resistance. So typically, when you get the rule of 3, 5, and 7 on a descending megaphone, if it can't break out here and it gets rejected, it fails and the whole thing just comes down. So this will be the critical point. This will be the resistance point. So if you think of this as a whole zone, it's got to break this and this to go bullish, or it can reject at either one of these and be bearish. So swing trades are a little bit off for long term, but like if you're looking at, a couple weeks at most, you might have a chance if we can get, a little bit of momentum between here and here. And it'll be like, what's that? Yeah, kind of, because we got to get through this bank turmoil, and then there's, God knows however many other toxic assets out there. And then the large caps are going to kind of pull everything. So, you got, dang it. I got to type slower or something. I type slow enough as it is. I got to slow myself down. As far as Intel here, we've got still some bullish sentiment here. We can maybe come up to $30 today. Let me go check out a few other large caps, and then I want to get into like Google and all the other stuff. But Yeah, all the heavy hitters. So AMD here is almost at a topping pattern, rejecting off that $100. I had a $100 target, and it was just based on this descending channel. It met that target, so I don't really think, I mean, sure, it can go higher, but I don't really think I want to pursue a swing trade yet. In fact, it can get rejected fully by that and just run on down, pull back to about $82 or so. Might even stop around this $87 pivot. But the point is, like, it's just not a great market for swing trading at the moment for, a lot of the large caps. But let's go check out Google and stuff. Kind of the same pattern, really. You got this descending channel here. We're at a key pivot here, this 106, 107 area. So let's throw a pivot on. I'll just kind of be rough with it. Doesn't have to be exact. Then your target would be, if it's going to retrace this pattern, about 118. Give or take. So I mean, if we can come out of that, cool. We got a break here and trade to here. Well, kind of sets up the same premise. It's been a hell of a day trading market, that's for sure. And we'll see if we get that bullish measured move out of SPY. We just got to know if it's going to break this 4,000 area or 400 area first. There we go. Now we got out of our horizontal megaphone pattern here. That's the third impulse. Let's see if it cleans the break, and always take some data from your pre-market there. I mean, they're drawn basically the same way, but when you whenever you take the time frame into it, sometimes you can go and stem it back to a point in the pre-market, but then it doesn't quite line up. So sometimes you'll have like two trend lines that come out of it. You got this one here, and you got this one here. So you can consider these to be like your regression zones within the regressions. So, but this is your center regression here. I'll extend that down. No matter how you draw it, it's typically going to be a 3-impulse deal before it makes it, a breakout. And notice it came right up to that critical liquidity zone there and stopped. So like here's that zone here, and it can accumulate here for a while and break through. Then if you also go and, where we have the 5-minute chart, there we go. Zoom out. I had my boxes up earlier, but if you think, that's your base, that's the top of your leg 1. This 399.50 area is the center of a measured move, so it would be a halfway point. So if you get the half leg, it's going to come right up to here and stop. If you get the full move, you'll get all the way up to just about 403.25. So we'll see what comes out of that. Pretty much if this, then that. So like if we break this, we can finish that measured move to 403. If we can't break this, well, we can get a range day, but we're more likely to have a trend day today. Just between the two liquidity zones, at least, which would be either here up to 403 or reject here and go down and retrace, like 394.50. There we go, we're pushing. Get the 5-second chart all zoomed in for you. There you go. We know where this line comes from. We know where this line comes from. Now we just need to see a break or rejection, whichever. We'll take either way. Yep. Right? It's like you can come off of this. There was a quick bearish measure move from the top of the channel, bottom of the channel. Boom, bullish here. Nice play. Ah, right. I'm. It's something a little outside the norm, a little different. Yep. Yeah. Yeah, they'll let you run with them. Although the yeah, and I was when I moved from Montana to here, instead of like renting a U-Haul trailer, so I would have been able to rent like a 12-foot U-Haul trailer. It would have been just a little bit north of 3 grand to rent that trailer one way. I'm like, I'll just buy one. Then I get an asset that I can sell when I get here. So it's like, I paid 1,800 for a trailer, and then when I got here, I sold it for 2,200. And like, just my owning it made it more valuable. Of course, I did put some service into it. I serviced the wheel bearings, and I greased all the suspension up and did a couple of repairs to it. But hey, upgraded it to LED lights. I made it worthwhile, but it was still a nice to have an asset where I can sell it later instead of, oh, heck no. All right. It's just ridiculous what they're getting for rentals, man. Drives me nuts. I mean, renting a truck, that's one thing, because I mean, it's a lot more value. But a trailer, it's a box with wheels on it. Come on, you know. But yeah, I see every time I see a U-Haul going down the road, I'm like, well, there goes a grand, at least. Wow. Oh, of course, yeah. That's that's a bit criminal, but well, you know, yeah, yeah. Sometimes you gotta break the system to make the system work for you, I guess. I'll bet. So natural gas is about to break $7 here, and we could see. Dang, that thing's been a widowmaker for many people. But if it bounces here, I could set up a second low for a little double bottom in this descending channel. Keep an eye on that thing around here. If it bounces off of that, it can be, a good swing trade setup. As I know that our supply storage was, damn near full not too long ago, and then they started drawing out of it to go and sell liquid natural gas. China's demand went up. I know Germany is importing all they can, and the rest of Europe is, well, certainly going to be asking us for some more. So that would definitely tap into our reserves. It typically does in the summertime. Although last year in, I want to say it was June or July. Oh, you know what? The chart will tell me. Duh. Yeah, let's see here. There's April, May. Maybe it was May or June. I read that article where they said they were going to double, the energy companies were going to double the cost of it. It's over here. Maybe it was March last year. I took a swing trade on it at some point. I think it was right in here. And I rode that whole thing up and then caught the pullback and hit it again. That one I did with debit spreads on UNG. This is an ETF. So it was quite a nice nice swing trade, but here we're at the, we've made a new low. It's lower than the 52-week low. And if it bounces off $7, well, I can get outside this channel and return to like $12, maybe make it up to 14, 15, but kind of iffy. Yeah, and then let me throw, I want to look at Meta. Right. Yeah, I mean, if you look at sectors and their 52-week low, oftentimes you'll be able to catch rotation. So like, if you have an idea to swing trade something in that sector, you can go watch the sector's 52-week low, and if you see that it hits the 52-week low and doesn't make a new low and bounces off of there, you get a swing trade out of it. A hell of a swing trade, typically. Yeah, we're kind of playing sideways here underneath this key pivot area, or the key liquidity zone here. And if it tips over, we could run a bearish trend. I was looking at Facebook over here, Meta. Just been kind of grinding on, but let's look back a little bit further. A lot of people are seeing this as a bull flag, but it's not. If you kind of squints a little bit, you'll see this looks a lot like that bearish bat that we play with sometimes. And if this breaks over the center point, there's your target, about 199. So might get a bearish swing out of Meta. And there was one more I was going to look at. NVIDIA. So NVIDIA was kind of destined for this high here. And if you look at the weekly chart, you got that big old cup and handle look that we were looking at, very similar to what we saw in SPY for the monthly or weekly. But it pulled right up to a key resistance point. This guy here is previous high. And if you set up your basic cup and handle, even though this is a much longer time frame, you always get two rim lines. And let's see here, there's your second rim line. I always run it just before the high or just after the high, whatever candle comes closest to not being the peak, because that becomes your cup rim. So you got your lower rim here and your upper rim here. And typically if it pulls back here, it doesn't mean it's doom and gloom, it just means you get a pullback. Typically it'll go to the next support zone. It's going to be the previous control bar typically. So you might get a nice bearish pullback and then a bounce off of this for a handle. You'll get resistance here, probably accumulation. It can set up a weekly measured move out of that and then proceed to the second rim line, but first it's likely to pull back. And you can see this was kind of a parabolic move to begin with, so is this. So it's definitely something to kind of watch. And that's, you know, being in the tech sector, that can produce a bit of a drag on the market. So, you know, kind of be aware of that. Something like that. I can't remember. I used to pay attention to all that stuff. What is percentage of what? I know that SPY's got more in Apple than anything. Like you could watch Apple and chart SPY in a lot of cases. But Nvidia is quite a bit of market share though too. It's not as SPY heavy, but it does have a tendency to kind of lead the market around a little bit. And then last week I was touching on IWM. And IWM is right at a critical pivot point too. So if this breaks down, you get a bearish measured move. Well, let's draw the box. Yep, all the regional banks are in there. All the, you know, it's the Russell 2000, all the 2,000 smaller companies are in there. So, right. So, I mean, it like SPY, you get the whole market kind of, it can go either way here. So, if you set this up as a bearish measured move, well, that puts your target down here at like, you know, 97, 98 bucks. Quite a bit down from where it's at 173. Right. What in the heck? Why is it just all blue now? Oh, because we're in that zone. Crossover. But that could be one hell of a bearish measure move if this breaks this support line here. But that's right at 170, I think, is the key support here. Let me delete those because they get in the way. Just something to be aware of. We've got, you know, this liquidity zone that I played out here. It's kind of holding. So, got a rally off of the 2-hour chart right to the next pivot line, which became our first target. Now, if we can finish the move into the upper limits of that range, cool, and we can break it. You know, this can be a reversal, but this looks a lot more like a bear flag than a reversal. So, just kind of be aware that, as I said with SPY and SPX earlier, we're kind of at a tipping point where it might be a little bit too risky to run too many swing trades, but there are a couple. It's just more of a day trader's market. We're gonna have fun, but it might not be fun for everyone. All right, SPY, nice little 1-minute double bottom. Let's see if it holds and runs back up into the range. I'd like to see it break this range and finish that bullish measured move, but it doesn't have to do anything, I say. It just has to do what we can perceive it to do, and we can trade it. That looks like a good point to take a bullish scalp as soon as it gets loose of this R1 on the double bottom here. That's the top of this previous candle here. And we'll see what happens right with our 5-second chart. It's the first high after the first low. So like you got L1, H1. I just call it R1 because it becomes resistance. So you got L1, H1, L2 is kind of in here. See L1, H1, L1, L2. I flip it into an R because I automatically know that that's our resistance. I just keep calling it R1. I confuse a lot of people that way, sorry. Right. All right, IWM. Not making enough chutzpah yet. Let's see. Oh man, I hate having a sore throat like this. It's not fun. That's still sore too. So every time I cough, it hurts. Yeah, a lot of last week we kind of noticed a lot of the flows were into tech and out of finance, but it might balance at some point this week. Right. Well then, I want to look at FRC one more time. I mean, a lot of people chased a bunch of this crap, and now it's kind of pulling a bearish measured move. It might find support down here at like 1295. Maybe right down in here. And there's our failure on that double bottom there. Yeah. So when it fails support, so you always look at either L1 or L2, whichever one's the lower. Let's draw a line on it. And sometimes you'll get another bounce out of here, but when they fail, they'll typically reject R1, which it did here. Then it broke over. It broke the mean, and then it broke the previous low. Even though it wicked here, oftentimes if it fails there, it can resume this wick, and then that'll be your critical support for follow through for a bearish measured move. Right. Well, it did create one. There's L1 and L2 here. And it goes further back on the 5-second chart. So you got L1 here for this 1 minute chart. It's back here. There's your H1. There's your L2. The second low was higher than the first low. But then we're looking at this as being L1, H1, L2 was over here on our 5-second chart. And it rejected. So if this closes a spinner right here, it'll usually reject the 8 period and break over. I'll wait for a trade on that though, because I could be wrong. About 15 seconds we'll know. I apologize for not being as lively as I usually am on a Monday, but I'm just not feeling the greatest this morning. Well, I'm usually a lot more animated on Mondays than this. I'll just say that. I'm just kind of Oh man. There's that spinner. Now we just need to resume this, break our support line, and we get a bearish measure move on. I can still do it. I'm just kind of dry and not as animated. Wait, what? Your broker does? That's a whole lot of not their problem. Okay. Right. And I was pretty sure of that, but it was like, it's like, let me reconsider. I might still open an account with them, but I just thought I'd try it out. They seem like a decent broker. I mean, the execution was flawless. Right. I'll be damned. We might actually break out here. Everything was saying, let's go bearish, and then all of a sudden we're not. 10 seconds left on that candle. Let's see. Although I can see Intel is breaking over. Morning. How's Ricardo this morning? You have a good weekend? Ah. Yeah. Very cool though. At least you're active. Dang, I wish this freaking thing would make up its mind. 5 seconds. It's hammer time. Let's see what we get. I need to see the 5-minute chart. Ah, there's that red hammer. Let's make this thing red. So if we can get above this guy, cool, we can start trending back up to this 399, 400 area, but if you can't break this bear flag's just building momentum or building consolidation for faster momentum. Amazon might break $100 today, maybe. Yeah, I guess with this whole sprained rib injury and having a bit of a cold all weekend, I still went out and made my usual 5-6 mile bike rides. And I should have been resting. But yeah, it's just beautiful here. I mean, it's a little hilly, so it's like my average speed is like maybe 8 or 10 miles an hour, but it's scenic. I mean, there's like lots of little hills and lots of forest areas, a lake. I mean, I can't complain about the views around here. Nobody would listen. For sure. Like I like this more than Montana. I really do. Where I lived in Montana, it was mostly flat in the valley, but it was surrounded by mountains, which were always beautiful. But I'd get up there and play around in them. It was nice to see. It was very pretty. Every once in a while, I'd go snowboarding and have a good old time. But the way the economy is in that town, it was like, gosh, I was working like 60 hours a week plus. Never had time to go outdoors. Here, it's like I got time. Go out and do stuff. I mean, if I was doing what I'm doing now and still living there, I'd probably have a lot more free time, but I wouldn't have had the opportunity to get where I am now. There we go. Nice big bull bar. Crazy. We tapped that support 3 times and bounced. Now we're back to original R1. I extended it here on a 5-second chart. It'll either break over here and then just rip a face off in the downside, or it'll break out and finish the trend. It's looking like we're getting a big tweezer though. And where? Oh, okay. Huh. So everything's like kind of done on a bartering system, or? Right. There it is. That was that momentum builder and that big old bear bar I was finally waiting for. No way to go past that into the trend. Remember rejecting R1? Don't go bullish. That was pretty awesome. Nice work. That rejection was clean. It's like we start telling stories and something happens. Every time. There we go. Now we can line out 3 lines, and we can start getting some price action that we can actually trade a little more efficiently here. There's the old Wu-Tang, but don't trust this one. Nice. Good work, my friend. So yeah, this will be a decent little choppy, day traders market today. But I think I'm going to hold off on some swing trades for a little while here, just at least until the end of the week, I think. And we're coming to the end of the second quarter here, aren't we? Oh, first quarter. Jeez, 4 months. My bad. Coming to the end of the first quarter, and things tend to shake up a little bit before that anyway. But I think once we start to see some of the earnings from the first quarter, we'll have some actual figures on whether we're going to trend bullish or bearish overall. I mean, we had a pretty nice fourth quarter, so when fourth quarter earnings came out, particularly for Tesla and a couple others, great trades, great bullish swing trades, but now it's like kind of in the lurch because we're not so sure about the first quarter. This thing could chop around in this range all day. I guess we'll get a range day. No trend day yet, but we do have expansion here and contraction here, so we could possibly see a diamond pattern set up out of today, but I don't think we're expecting anything really volatile this week for news, so. We got a political comment on our YouTube feed here. We can agree, but we try to keep the politics out of here. After hours? Yeah. Yeah, we might see some movement then. Might be able to get a little quick scalp out of FRC, but it's not going to be worth a whole lot. You might get about a 30-cent move out of it. It's looking like a return to about $15.40. I've pretty much taken that thing off the scope except for today. Today it's like kind of got a little bit it can do. Once this pops up, we get typical when a bear flag does this. It'll look like a reversal. It'll come up, hit a key trend line, and then break over. So it'll be a quick, what I used to always call a pop and drop bear flag, where you'll get the accumulation, it'll look like a reversal, it'll pop up, and then all of a sudden it'll get sold. We're in phase 1 of that. We can breach this, possibly run up here to about 15.15 and break, or we could break here. And if it breaks bullish or bearish here, it'll break 14.60 and probably head for about 14.10. And more choppy action on SPY. We're coming up to an angular right here. Also the 20 period right there. Not on a 1 minute. This is looking more like a diamond here. So we got compression on this side and expansion on this side. It's an ugly one, but I'll draw it. It's not going to be pretty. And I do have a little background noise today. My niece is 5 years old. She's hanging with us. Nope. The noise filtering works really good for the Discord channel. But it comes out on the YouTube channel. So if it's going to the YouTube channel, it goes to our website as well. So because I can see it modulating on the YouTube channel. I know some of you guys can hear the background. Good morning. This is what I'm looking at is basically a 1 minute diamond pattern. It's an ugly one, but it seems to be holding form so far, even though it had that break. Sometimes these will break support and then rip a face off in either direction. You'll get the fake break out of the diamond, so to speak. But this is likely to trap range in that area for a while. And we might get a slow breach back up to like 398.70. But if it breaks support here, we've also got the setup for a bearish measured move still on the plate. So even though we've reached it right down here, let's draw the box. And I'll just drag this one to make it. Instead of duplicating it, I'll just make it trade the same break. So it was pretty close. There's still some potential unfinished business to run this entire bear trend for a bearish measured move. I'm going to do my best to get a really good amount of rest today. I think I'll call off the bike ride this evening. I try to. Between 4 and 6 miles, I'm going to try and do. Cause like I've transitioned from like working, on my feet for most of my life to working from a chair. So I try to keep in shape by just at least being physical. Agreed. Oh, the same. But I mean, I've had this cold for, well, this cold I think is also compounded by allergies. So like dealing with that, and then a couple of sprained ribs, so it hurts to cough and sneeze. But on top of that, I'm like, I'm not too sore to go on a bike ride. I can do that. It doesn't work. That I can make it work my whole body, but for the past few, I've been just using the legs. I do. I'll take like Claritin. Yeah, vitamin C. Vitamin C, lots of zinc. I get some D vitamins in there, and the other thing is, what the heck is it? Local honey helps with the allergies. Mm-hmm. That's for sure. It's kind of one of those days. It's not the most exciting price action day anyway, so. Oh, here we have a little 5-second double bottom. There you go. That's what it was setting up to be. I mean, looking at, it is. And then, again, it's at that tipping point. I'll pull SPX again here. We've got this descending megaphone here, and we've been rejected too many times off the angular, including today. So we've got a very likely pivot point down here, about 39.45, and then if we breach that, we can finish a bear move. But let's look a little further back. There's your high, all-time high, 48.18 up here. If you think of this as your trend, and this is a big old bear flag, where does that measured move take us? It takes us to the deep south. Right. I was just thinking of that movie Little Nicky. The deep south. Sorry, Adam Sandler. I mean, can you imagine 31.13? That's a short-term bear target if that breaks. But if you want to grab the whole thing, that's just to the median of this bear flag. Yep. It's like, oh, really? Hold my beer. So, like, this is what we could see. I mean, here's your base, peak to base. If that finishes a full measured move, dude, I mean, that is like back to damn near COVID breakover, like 2,400. Insano, but dude, we've seen some pretty crazy market conditions, so it wouldn't surprise us. All right, here comes our bearish measure move completion finally. That puts the diamond in the back burner, so to speak. This can still be the breakdown to a support zone and then a rip off in the other way. But we know there's unfinished business to the bottom of this. This is a bearish measured move setup. We're about to nail it. So about 396.70. We just touched 396.80. Boom. 396.65. Let's see if it holds here and bounces back. Sometimes you'll get a leg and a half measured move where you get the full measured move plus half, which would take us to about 396.30. But yeah, looking at SPX, it kind of cleans up a lot of that that price action that makes a bunch of noise in the pre-market and after hours times. So you just kind of filter that, figure out where the key pivot is, and know that you can make half leg, full leg measured move. Or this can be a reversal and it can come back up and hit the retrace target, which is, you know, up here at about 42.92. This is a weird place to be in the market. So like I said, swing trades are kind of a bit too risky right now. And I think once we pull off Q1 here, we can start to see what the market's going to do going into Q2. Let's see. I'm streaming onto the Discord channel here. Let me get a screenshot of it real quick. And I'm also streaming onto our website via YouTube. So I'm going with a embedded YouTube link in our website. So you can get us either place. Someone private messaged me and asked me where I'm streaming to. Yeah, there you are right there. All right, we finished it. Came back to the base. We can retrace this candle here to 397.15, or we can set up a shorter reversal here. And there's a fan line involved here too. Oh, there's a whole trend line involved there. Borrow this. Right. I was kind of teasing that old wives' tale phrase last week. I was saying, you know, the sell in May and go away. I was kind of thinking that over, and I'm like, well, if that's already an assumption by some of the old money, and then you've got a bad Q1 earnings announcements coming out, yeah, I could see that happening. Might actually play through that this year. Either way, I can make bearish swing trades, I can make bullish swing trades, but when you're trading from the center point, can you do both at the same time? Sure, you can do some condors way the hell out, do some leap condors, but by the time you get there, you're not going to have a very good risk to reward ratio in that structure, because the way you'd have to set it up would be far enough out of the money where it make your risk overall worthwhile, but there'll still be a way to trade it. I'm kind of concerned because I'm starting to look at some wheel trade setups for Q2, and about the only one I see that's even worth looking at for at least something I can present with or make an example with is this little kind of a risky one, but it's one I know I can make a zero cost on in very short time. This OPEN. And it's kind of chilling. It came off of its 52-week low here, about 91.7 cents. Kind of cruised back above $1. It's consolidated here. If this finishes a reversal here and gets back above 220, we could see it trend out. And it's cheap enough, and it has weekly options where you could sell premium on that thing. It's not huge amounts at a time, but your percentage yield will still be around 8% weekly on a natural wheel trade cycle. That's like if you were holding OOPEN. They're a company that goes out and buys houses, and they're doing now what got Zillow in trouble. Remember what got Zillow in trouble when they were buying up all those houses and trying to flip them? Well, yeah, they could. That's the whole point of it's. Yeah, right. Hmm. Right. Well, I mean, it works um, to some extent. I mean, it has pulled a nice little cup and handle after this trend here. Certainly has a lot of premium. It's cheap enough. What's right? What's right? I just look at what is the outlay and return percentage. So like if right, yeah, if it's volatile enough and it's got that volatility, I just compare like how much money am I going to put out and what percentage of a return am I going to make? Can I beat at least 8% natural yield per month just selling the options? Because if I look at natural yield, I'll call it natural yield because it's as if you're going to sell them to open and sit on them until the last couple of days and then buy them back to close them. That's what I consider natural yield. If I can make at least an 8% monthly natural yield, I know I can get upwards of a 20% of an active yield. So like if I'm swing trading those short legs, selling 2 weeks out and rotating them on that price action in and out, capturing, a nickel here and there or more, I can push that yield a little bit higher. But right. Oh yeah. No, not anytime soon. And it's not like one of those ultra, where they have the 2x or 3x leveraged, where they're just a big depreciating asset. Right. 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 It's not like SPY. All right, we touched 200 almost. Let's see where we go. Can we reach to 397.30? Maybe. Or not. Oh, wow. Look at that about face. No sooner than I said it. Right? That's a whole bunch of block orders taking place. If I'm looking at the flow real quick, hold on one second. Yeah. Right. We're setting up for a extension to this liquidity zone here. We can see 395.80. There's your measure move done. We can sometimes get the extension for another move. Yep. That thing's ancient. I've had that one on for the better part of a month now, and it's wide. Well, I hope we don't breach that, because that would be all the way down to 390. $392 is a critical support, and then if we break that with some force, we'll hit that 388 pretty quick too. So, wanted to see where the order flow was. Man. Let's see, highest volume price is 395.62. Second highest is 397.93. Yeah, there's some sellers here. Order flow was net positive on the open, but it can flip here. Let me go to the advanced decliner menu. Show you what I'm talking about. I'll get a screenshot of it and throw it in the chat. The REB. So you can see everything's kind of net positive on the open here, but it's starting to flip. And let me see if I can figure out what sector that is. Looking like software and services and tech are both decliners right now. And last week we saw, like we were saying about the flows, we were looking at a lot of money flowing out of financials and into tech. Well, it's kind of like profit taking. It's the same with any sector. You'll see some return to mean. And I'll go look at Google real quick. Dang it. That's where I gotta like pause for a second and then hit the enter button. All right. So now we're starting to see some outflow. Well, we've got, return to this accumulation would be about 102 for Google. So we can have a quick bear target on there. So if we do get a trend day, that would take Google to 102, down another $2. Here goes SPY breaching over for that extension on the leg. And And there's your other fan line on the 5-second chart. That's your short-term target. So when it started to breach the old regression line here and it went for that 200, blam, that's when I was talking and I got that instant red flash. So if it didn't break this and head for this, well, the next scenario is finish a measured move. So we have one leg, accumulation, one leg. That's a measured move on a 5-second chart. You can see it right here. This is about the same height as this. So if we reject this fan line one more time, like we just did, we'll likely reach all the way down here to about 396.05. If you drag this down in the next leg, it takes us right into the top of that liquidity zone to complete that full measured move. So this is a 2-for-1 setup. So you got your 1, there was your 1-for-1, 2-for-1 would be here. So watch for rejection off this peak, and we'll see if we get the continuation to run a 2-for-1. There's that old regression line again, and the 200 has met it. Well, we're out of the box a little bit, but let's see what this next candle does. If it's going to retrace, it'll likely retrace back up before a break over to about 397.30. And like with any other double bottom, you kind of also have control zones. So you have one target here, one target here. I'll just draw them. I wish I could get Webull to let me draw freehand, where I don't have to wait and do these segment lines and stuff. A lot of other brokerages, you just have a standard pen. You can go and freehand draw stuff. Not so much here. Yeah. At one point, I mean, I can go and screen capture it with my phone and draw with it all I want, but like I can't go and find any menu where I can just draw. Well, hang on, let me see. Well, that doesn't work. Hey, maybe I can here. So I got to select it and then click. Oh, okay, I can draw now. But it's only in a segment, so then I got to stop it. That's a little too tedious. Well, at least I know I can. Let me see if I can set up a default for it. That's going to default all my colors now, isn't it? At some point I've got to go and delete like all my dope on my chart because it's actually making my application lag a little bit having all these drawings on. I don't know why it does it. It just seems that whenever I get a lot of drawings on any particular equity, it'll lag. But like if I go and draw stuff on Google here, like I can take and move stuff around, do whatever I want, because I don't have a lot of drawing on it, it's fine. So it's like per whatever the heck ticker I have where I have the most drawing will lag. Not that I know of. No. No, nothing like that. In fact, I even have my well, my CPU's overclocked a bit, but that shouldn't have anything to do with being able to have a memory cache. Let me see here. Currently I'm using 10 of 32 gigs of memory, so it's not like it's, you know, too washed out. I don't think there's a cache limit on the program. I'll have to double check that. That might be something to go through later on. I am running, damn, I'm uploading 24 megs per second. Yep, that might be the deal then. Yeah, it's like floating between 16.8 and 24.7 megs per second upload. Cause I'm streaming to YouTube and the Discord channel at the same time. And I have the 2.9 gigahertz processor, but I've got it cranked up to 3.9. It seems to do it just fine. It doesn't make the temperature climb too much, so it'll handle it. It's amazing what you can get the i5 to do. Right, I'm able to do some of the encoding for the live stream with the graphics card. It handles a bit of it. Maybe. That's a good question. I just have to figure out how to optimize it. See, it shouldn't lag like this, but it just does. The more drawing I have on it, the more it lags. Like here on the 5-second chart, it's not too bad. You know, I can move stuff around. Doesn't bother me much. But over here on the 1-minute chart, it's like I've got so much stuff backlogged on the 1-minute chart that it just adds up. I think that was Scott. Yeah, I've never used that one. There's one bank that nobody looks at. IBN. It's what country is that thing out of? Hang on, I'll find out in a second. No, it's ICICI Bank, and it is out of. It's India. Sorry. Headquartered in Mumbai, India. But it's I kind of look at it like on the emerging markets. I came up with it. It was a holding of some ETF from related to emerging markets. And the one thing I noticed is that it has very gappy movement. So back in the day when I was very active in a swing trading group on Facebook, someone had brought it up like, you can't swing trade this. It's garbage. It's twitchy. It's, you know, gappy. I'm like, well, let me have a look at it. So I went and looked at it. I'm like, go to a long-term chart, you can set your targets pretty well, but then, yeah, look at this gap. That's a weekly. Massive gap. But what you can do is you can still set up trend lines on this thing and trade options on it. Even though there's not much liquidity in the options, when it does have one of those big old gappy moves, you get paid. Because suddenly a lot of volume falls right at the money. So that might be something to consider running some debit spreads on. And I want to wait till it kind of catches up with the rest of the world, so to speak, because it's kind of bullish. Either we'll get a bullish measure move out of that and run up to like 2150, 2160, or we will break over and retrace back to $20. So that's only an 88-cent move. This is something. It was a challenge to trade, so I went and traded it. But I was able to make short-term trades on that thing. I would go and like back when it was moving very irregularly. Let's say it was through 2020 maybe. Yeah, it was in this channel. Back then I was able to just set up some trend lines and trade the channel, and it would just gap all over the damn place. This is a daily chart. Yeah. Yeah, it trades in the US. It's just kind of gappy. It's not very easy to trade, but when it does move, it moves big, typically. Yeah, it's not very high volume traded, but it's like I said, it's the bank everyone forgets about. All right, we ground slowly up. We hit target 1. Target 2's up here still. It might get there, but it's got to breach this fan line first. If it rejects here, we can be bears again and run back down. I wish I could give better answers on today's price action, but this is hard to trade. And I think the diamond pattern we drew earlier is broken now. It's one thing you can get from it, though. Oh, dang, I just changed my default color. Oh boy, I don't want to set that default. Good enough. All right. So what you do get out of these is you get a channel line. So if we respect that, we can take this segment, extend it down. This one was way off. It should be up here. Good Lord, this is laggy. And that would set this guy down to parallel that. So oftentimes you can get a valid channel out of these. Once you've established a diamond pattern where you have expansion into contraction, even if it doesn't fill out the rest of the diamond pattern, you still get a channel. So we can accurately trade between the angulars and just plot out all of our pivots and price targets within that trend. Bam, nailed it. By the time I finished drawing it finally. Most of the time when I'm trading by myself, I'll just eyeball them. I don't necessarily have to draw them. It's better to set up an example, like when I'm showing everyone else how to do it. It makes sense to draw those lines because it gives you a visual that you can see. You can kind of train your mind to understand. But once you know where they're at, I mean, you can just kind of glance at the chart and be like, okay, well, where's price likely to go after this mess? Well, back to regression or back to a previous trend line. So theoretically, you could draw it from all the way back here with your mind, or you could just look at these 2 points and be pretty close. So you can just imagine a line through here. And you can see where it is. It's both. Right now we have the descending channel, but because we have this doji here, we're likely to print a morning star right here, which we just did. And if you were looking at the 5-second chart for a signal, there's a regression line right here. So there's your quick morning star. It's about done. 20 seconds left. A descending channel. Sometimes they're pretty clean. See, and this one was weird. Even you didn't get the full open and close bar to equal the first bar in it, but it still made it to the top of the wick. So can you count that as a morning star? Probably not on a 1-minute chart, but probably get it on the 30-second chart. Nope, you can't. No, can't have. But the thing is, the trade was the same. So when you're trading a third bar on a bar down from with a spinner, you can get the retracement. So you can go back up to the top of the bar. That trade was there. I mean, you can grab that from the 5-second chart here pretty easy. Bam, back up to the 8 period. This is ticky-tack right here. I wouldn't mess with this. You can scalp it on a 5-second chart, but if you're trying to swing SPY options, this is doom for options traders. Just because it's damn near impossible to scalp these. Unless you're like at the money, and if you are, you're like time decay is going to eat most of it, even if you are on the right side of it. Yeah, you need like good trends with pauses to trade options on SPY, or you need at least a reversal or something you can take advantage of. But here, that's going to be way too choppy to trade options on. You could do it with debit spreads, like down from the top in a trend, because debit spreads alleviate a lot of that time decay and a lot of that. A lot of the delta swings will tend to be a little bit more stabilized when you're trading a spread instead of just a straight directional option. But like if you're trying to day trade single contracts in this, you're going to be having a bad time. Like you'd have to be out of the money to have enough leverage on it to be in a good risk to reward ratio, but trying to trade it through this, good luck. Oh, I hate to say it, but it's after 11 and I'm kind of not necessarily falling apart, but I'm just like not feeling the greatest today. Price action's kind of eh. It's a little bit Monday-ish, I guess you could call it. Yeah, of course. Okay. You too, man. I'll take the call on my phone, so give me a minute to get my earbuds set up. That way I can keep my screens going for the folks in the Discord channel. All right, guys. So we'll see you later. Tomorrow will be a little bit more animated, I promise. Yeah, I'll go take some emergency to boot. So I don't think I've had any today. So get me back on my game, because I'll see you guys later. And I think you can still hear me out on YouTube. I have my Discord channel muted for the moment. Thanks for joining us, guys. I'm sorry I wasn't so animated this morning. Appreciate you hanging out with us. And if you're not a member and seeing this on our website, and you're just seeing it on the YouTube channel, like and subscribe, hit the bell. But above all, just kind of tell your friends. We do a lot of knowledge sharing around here. We teach you how to chart for yourself. Pretty soon we're going to get back into doing like kind of in-depth market analysis to put out there for everybody. So we'll start looking at kind of similar to a few other channels I know that will go and look at all the different sectors and kind of give you an idea what to expect for market trends like that. But we're going to do it in a little bit different way. We're going to show you mainly just scanning the ETFs that are in those sectors, like looking at the SPDRs and stuff like that, and kind of giving a good outlook for what the market is expected to do per sector. So we'll be getting into those breakdowns within a few weeks here. We'll start doing those, not necessarily daily, but at least weekly, to give you an idea of what's out there for swing trade setups more than anything. So anyway, hopefully we have a decent first quarter earnings announcement coming out into the beginning of the next quarter, and we'll see if there's some good sector rotation to trade from there. Otherwise, if not, I mean, we can always make some short-term trades until we can figure out what the heck the sector is going to do. Thanks for joining us again, and we'll see you guys tomorrow.